Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the weekly time frame, where we're looking for a 5-wave impulsive move to the upside, and inside the yellow wave 3, looking for the internal green count 1, 2, 3, 4, 5. Common target area for your wave 4 is the 382 to the 05, 57.6k to 53.3k. The invalidation is the 0.618 at 49.3k. After wave 4, we're looking for a wave 5 to the upside, where the target is between 78.6k and 110k. That is, of course, a very big target area, but based on local structures, we can become more specific. Locally, price has touched the 886, taken from the high to the low, which increases probabilities that any move towards the downside is a wave C or a wave Y, which in turn increases probabilities to sooner or later continue to trend towards the upside to take the all-time high, matching the probabilities on a weekly time frame. The most bullish scenario locally is that your range is finished and you're looking for a wave 1, 2, and continuation to the upside. Looking for this wave 2, your final common target is the 786 at 67.7k, taken from the low to the high of wave 1. We, however, don't want this wave 2 to touch the 886 at 67.1k, as the 886 is very rare for a wave 2, significantly decreasing the probabilities this move to the downside is a wave 2 and increasing the probabilities to take out the low. If we look inside this wave 2, we're going to be looking for 3-wave corrective structures. In this case, we're looking for either an ABC zigzag or a WXY. A 5-3-5-wave structure in an ABC doesn't look that great because our wave C is very short. Wave C so far only hit the 0.618 trend-based fib extension, while the common target for a wave C is between the 1 and the 1.236. The 0.618 is rare for a wave C and therefore unlikely. If we then think about the WXY, then we have a zigzag in a wave W, another 3-wave structure in a wave X, and then a flat structure in a wave Y. We then definitely want to finish this move to the downside very, very soon, because again, we do not want to touch that 886. So actually, preferably, this is then your low in that case. However, if we then zoom in to the local structure, as in the wave C, we're looking for an impulsive move to the downside, then arguably we still have one more low to come here, as at the beginning, we're then looking for a wave 1, 2, 1, 2, highest amount of volume in a wave 3 to the downside, and then a 4, 5, looking for another 4 and another wave 5, where this wave 3 might be finished then at the low over here, starting a bit of a range in the blue wave 4, and then another drop to the downside in wave 5, which then is very likely to touch that 886, lowering probabilities for wave 2, increasing probabilities to move below 66.6k, which increases probabilities for scenarios that I have yet to show. Now the 0.618 is on the chart. If price can move towards the upside and touch the 0.618, it invalidates this wave 4. So that would give at least some probabilities to the bull. So 69k therefore is an important level. On the daily time frame, the bearish but eventually bullish scenario here is a finished wave 1 looking for a wave 2 to the downside and then a continuation to the upside. Now the common target area for your wave 2 is between the 05 and the 786, taken from the low to the high of wave 1, giving you a target area between 64.2k and 59.8k. The 382 at 66k is an uncommon target, and the 886 is very rare. What does impact the probabilities for this scenario is this wave 1, because if we put wave 1 on this high over here, it means we need to count a 5-wave structure here to the upside, but your wave 4 is a lot shorter in time than your wave 2, and also your wave 4 did not even hit the 0.236 Fibonacci, taken from the low of 2 to the high of 3, which generally is a minimum target for a wave 4, so that lowers the probabilities. This is a wave 4 in a 1, 2, 3, 4, 5. However, if we then count 1, 2, 3, 4 and this the high of a wave 5, ending wave 1 over here, then on my chart that is a truncation, because this high here did not take this high on my chart, and the same is true on some other charts, while on some other charts again, like the index chart, this high actually did take the high over here. So you don't have that truncation, but I'm not really a big fan of truncations on my chart here. So of course it also therefore impacts the probabilities negatively. So if we do move to the downside, find support and move to the upside, something that we at least have to consider is a bigger flat structure. So we then have a wave A to the downside, look for a 3-wave B, and then a 5-wave C to the downside. Inside wave B, we're then looking for a double zigzag, a W that is finished, a wave X, and then a wave Y to the upside, which also should be a zigzag structure. The common target for wave B is between the 1.236 and the 1.38, taken from the high to the low of A, giving you a target between 80.4K and 77.9K. After wave B, we then want to see a wave C to the downside to take this low at 56K. Looking at the CVD divergences, we had some bearish CVD divergences as price is moving to the downside. Lower highs on price, higher high on the CVD. Absorption of market longs with limit short orders, and also here more locally. Now these bearish CVD divergences have played out, and what's most important now is to observe the CVD divergences on the right side of the most recent low that we have made. Just to show you the bearish CVDs over here, lower high on price, yellow moving up as well as blue moving up. That's a bearish CVD divergence. And same was true here, lower highs on price, higher high on the CVD. Now all of these, as mentioned, have played out. And for the bulls, it is important to move towards the upside, get a bit of a bullish market structure and create some bullish CVD divergences preferably as well. And if we then look at the probabilities of the different scenarios, and on the weekly time frame, the probabilities are higher for the bullish scenario compared to potential bearish scenarios, which only become relevant if price can move down to hit 49.3K. On the daily time frame, the probabilities are also higher for bullish scenarios to take the all-time high before maybe at a later stage 56K, but at least all-time high first at the moment. And a potential bearish scenario where that is not the case would be a zigzag in an ABC, where you move down to take the lows at 56K, but that has a lower probability, as explained in a lot of detail in the live stream yesterday. On the 4-hour time frame, just because of the local move to the downside, the probabilities at the moment are a bit higher for bearish scenarios compared to bullish scenarios, moving down closely to 66.6K, which it would invalidate those bullish scenarios as well. And if we then come to the 15-minute time frame, then currently, locally, the probabilities here are higher for an unfinished impulse to the downside. We could look for a potential bounce for the time being, as price is moving down on a bit of decreasing volume and we are reaching some support levels at the low here. We continue to observe. Some other corrective structures like an ABC at the moment for potential 2 don't look that great, because your wave C is very short as explained, and in a potential WXY, preferably your wave C is not yet finished. Of course that changes with hitting certain levels, which I'll talk about in a second. Now we were looking for price locally while it was ranging over here to move to the downside inside the fib target box and then look for some support if we can get it. However, price moved towards the downside. It dumped straight through that potential area of interest, and now we are at the lower support boxes. So now we can again observe what price does here. Due to the potential of an unfinished impulse on the 15-minute, the probabilities increase to hit the 886 just below, which therefore also increase the probabilities to take out 66.6K. Preferably for the bulls, your local low here is in, and what we're going to be looking for is a bounce to the upside, right? A bit of a grind, market structure change, bullish CVD divergences, some proof of support, bullish market structure, so either an impulse on the lower time frame, a leading diagonal, or a multi 1-2, preferably with some bull CVD. Touching 69K would also help, because a change in probabilities, well, for the bears, taking out 66K increases probabilities more for the bears. If price can move up to hit 69K before taking out the local low, it will slightly increase the bullish probabilities, and if price can move above 70.2K, the range over here, the probabilities will increase for the bullish scenarios to look towards the upside. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.